To be fair, it's too early to tell, but he hasn't said anything that makes me feel comfortable about owning GE shares. At this point, I look at it as a lottery ticket.
What did he not say?
Well, there's one thing that's really concerning people, which I think is their liquidity position. JP Morgan said they have $100 billion in liabilities and zero free cash flow from the enterprise. So I'm kind of wondering, how are they going to make sure they can pay off their liabilities? And what can they do for investors to show that they have ample coverage of their liabilities going out for the next 20 or 30 years? If they can do that, then all they need to do is prove that they can resume double-digit growth, which they had under Jack Welch. The company has shrunk at about a 3.5% annual rate for the last 5 years. And there are plenty of other stocks out there you can invest in that have a positive revenue growth and even generate positive cash flow and profitability. So why would anybody want to invest in General Electric stock at this point?
So, but you're a stockholder, Peter, am I right? So why do you still hold it?
Yes.
If that's your view.
Well, as I said, it's a lottery ticket. It's a lottery ticket on the possibility that Mr. Culp can turn around the company. And so I'm fortunate that it's not a big percentage of my portfolio, but at this point, it is a bet that he'll figure out a way of turning around the company. But as I said, there are two things he needs to do. One of them being figure out how to solve the liquidity problem, and the second one to resume double-digit growth in the revenues.
Peter, I mean, he actually tried to convey today, I thought, that there is no immediate liquidity problem. And, you know, talking about $40 billion in committed bank lines they've barely drawn on. They have a methodical way they can realize cash, perhaps, from divestiture of healthcare. So the idea here is, yes, the market didn't take it well, but from Culp's perspective, he's trying to say we have a relatively visible path to where we want to go on the balance sheet.
Relatively visible to him, but there's so much detail that you need to understand to know whether your liquidity position is really solid. I mean, the bank line is borrowing, so you know that's adding more debt if you start drawing down the bank line. I'm kind of looking at the asset side and the cash side, and what cash do they have available, or you know how much cash can they raise through reasonably priced asset sales to make sure that they can pay down their debt. So it's a little vague. There's a lack of transparency here. And the biggest thing that really kind of bothered me is that in the statement that he made the other day, he said GE is fundamentally sound. Why isn't GE just sound? Why is the word fundamentally in there? What is that masking? There's a lot of financial detail underneath that I'd like to see.
You know, $20 billion in cash is what they have on hand, Mike. There's also this feeling, and I've read this in the research notes and heard this, that there are more skeletons in the closet. And Culp didn't really say that there weren't any other shoes that were going to drop there.
Not a lot of detail about exactly what the kind of liability challenge is on the insurance financial side of the business. He said they maybe were close to power bottoming, but not there yet. So I do think that did feed the idea that they're still working through some bigger issues that haven't been divulged fully.